I just want to talk about the seasonality for a minute. We have the post-election seasonality, and we're no longer following that. And again, I've talked about how the seasonality isn't always right. This seasonality, post-election year, we should have peaked on August 2nd. We did not. Nasdaq peaked on August 13th, Bitcoin on August 14th, and right about that, a little bit earlier than that, we saw Nvidia peak. The S&P is not. The seasonality can be wrong. We were going to rally in March. We didn't. We fell down to the April low. Not going to be perfect. But the post-election seasonality doesn't look like we're following that anymore. If we look at the seasonality going back 100 years or so, just looking at the seasonality for the last 20 years has included the recent election cycle. But we got everybody out there on social media now saying, oh, the September sell-off, the seasonality, it's been canceled. Has it really? It doesn't look like we're following the post-election 4-year cycle with the seasonality, but if you look at the long-term seasonality, this is going back over 90 years, this peak right here is telling us that we're going to top around September 6th. That's Saturday. Again, this is the long-term chart of nearly 100 years, but it's saying that we're still going to get a September sell-off and that we peak in August, sideways, and then go slightly higher, which is what the S&P 500 has done. So again, this is still suggesting a sell-off in September. Market to peak on September 6th, that would be Saturday. So again, this week or next week, based on the long-term history of seasonality. It's also suggesting a mid-September bottom, which we have the Fed meeting on the 17th. We have options expiration on the 19th. So could we get an ugly September sell-off, or has the September seasonality sell-off, has that been now canceled? I doubt it. Historically, September is one of the worst months of the year for the S&P 500. We'll see if that continues. Because we're going sideways at major resistance in the weekly time frames. Remember, on those weekly charts, we got topping tails last week in the form of dojis, a gravestone doji on Nasdaq, a doji on the S&P. Watching to see if those candles are confirmed. By Friday last week, we got back-to-back reversal candles in the weekly time frame. A hanging man followed by a doji on the S&P 500. Does this get erased? It was at the lows of the week. It was. Do we end up getting another topping tail and end up giving back all the rallies surrounding the jobs report, S&P weekly chart? You can clearly see on the chart, we're going sideways, slightly drifting higher each time, S&P 500. Nasdaq already peaked back on August 13th, and we have back-to-back candlesticks here. We got that topping tail, but then we had a hanging man candlestick, and then we got a gravestone doji. Does that end up being confirmed? It was trying to be confirmed at the start of the week. Do we end up giving all this back, end up with topping tails, end up seeing the doji candlesticks end up getting confirmed if we sell off with the jobs report? We'll be watching to see how it all unfolds. Will these candlesticks be confirmed or not in the weekly time frame? We've already slammed up into major resistance on Nasdaq over here, hitting lower highs. P moved to a higher high last Thursday. Still may try to make another high. Signals are still bullish, but they're diverging, and that's a huge red flag in and of itself. The P moved higher, the Nasdaq did not. A lot of people all over social media, nothing's taking this market down. In the crypto community and with the traditional markets, people super bullish on Nvidia. Nothing's taking, and again, they weren't bullish down at the bottom when I called the bottom for Nvidia, but now moving off the top, same thing for the Nasdaq. Now they're super bullish. A pullback would be a healthy thing. I still think we go higher, but I still think we're going to see the seasonality take place. We're no longer following the post-election seasonality, but that long-term 100-year seasonality suggesting September's going to be a very, very bad month. And again, the worst months for the S&P 500. The doji here on Nasdaq, gravestone doji on Nasdaq, and the doji here on the S&P 500, will they be confirmed by Friday's close on the short trading week with the jobs report? Or is it like it's being proclaimed all over social media? Oh, there's nothing to worry about. Nothing's going to happen. Seasonality, schmeasonality. We don't have corrections anymore. They say the same thing every time. We're just drifting slightly higher. S&P continues to slam into these trend lines again, just below it. I'm going to show it to you in the daily time frame in this video with our linear scaling here from the 2023 low, moving slightly above the trend line here from our 2022 top here. And again, we did that last week. We got above it, but we weren't able to close there. And we got that doji. Meandered around this trend line over here and back over here with when it first began. But eventually you saw these sell-offs, and you're likely going to see the same here. The seasonality is not likely going to be canceled for September. And SpaghettiOs, look what's happening as we're slamming into resistance. You've got the NAAIM exposure index, which shows what active money managers are doing. It's turning down. Look at that. Off of the key trend line of resistance, you're at extremes forming this negative divergence. This is what happened right here, right before that happened. Okay, this is what happened over here before this happened. I'm not saying we're going to see that extreme right now. I think you're going to pull back. It could get ugly, but I think that the 200 period moving averages and the daily time frame are going to hold up. But again, people right now are lulled into a false sense of security. Oh, it hasn't happened yet, so it's not going to happen. There's nothing to worry about. Yes, I think we're going higher. I think we're going to 67, 6,800 on the S&P. I think you're going to pull back first, a bigger pullback than what we've seen so far. Just dancing. We're just dancing around the trend line like we did over here and like we did over here. And again, you're likely going to pull back to the 50 here or maybe just above it at our 20-week moving average, not seen on this chart. But this is telling you, and again, the active money managers, they're all in. And when they're all in at extremes, you either with an extreme or a divergence at an extreme, that's usually where these tops have come in. Sometimes major tops like in 2022 or back over here in February of 2025. At times just pullbacks or sell-offs, bigger corrections, sometimes major corrections and major sell-offs and reversals. I'm telling you, this signal is warning that a doozy of a sell-off is coming. The herd has been lulled into a false sense of security, believing it's not going to happen. And that means when we get the rug pull, it's going to be nasty. It's going to be ugly. We've been going sideways through the summer since July, drifting slightly higher into this trend line. Nasdaq making a lower high. Is the September sell-off canceled? The seasonality is still suggesting we're going to have it. Long-term seasonality, I wouldn't ignore this chart. Money managers tend to be all in at the top, extremely bullish, which is what this is suggesting, and at bottoms, like at the 2023 low or back over here at the 2022 low, they're all out. Like the herd, they tend to be very bearish at the bottoms and very bullish at the tops. We're going to start seeing some of these institutions start selling, and we're going to start seeing a rug pull. And again, the seasonality would suggest that we're going to see it by September 6th. Today is September 4th. September 6th is a Saturday. So again, this week or next week, historically, we get an ugly September. Yesterday, I told you to watch to see if the VIX attempted to fill the gap as the S&P did. S&P ended up filling both gaps. The VIX filled this gap right here. From Tuesday, we moved up to the 200. We got a topping tail there. Still bullish divergences. We had inched above the 50 level. We're just right underneath it right now. The MACD has come right up to the center line, getting a bullish cross with multiple point divergences. If volatility turns up and we get a sharp decline in the market, we could see a breakout of this trend line of the bullish falling wedge. We could see the MACD push into positive territory. Market still at resistance, and traders are extremely complacent. Nasdaq's gone sideways with a lower high. The S&P has gone sideways, drifting slightly higher as they diverge. Start getting a sharp sell-off. MACD will go into positive territory. The RSI will hold back up into the positive region above 50. But the VIX has to get back above the 50. It dropped back to below it to fill the gap right here, and then we have to see a breakout of this trend line right here. Just formed a bullish falling wedge. We had the tightening of the Bollinger Bands, but all we've seen so far on the S&P is it price drifting sideways moving slightly higher, whereas Nasdaq has drifted sideways, making those lower highs. Okay, right now, expectations are very, very high that we're going to get a September cut. Right now, 97.3% chance based on the betting markets, based on Fed fund futures, that we're going to get a cut. Only 2.7% that we're not. Now, we're going to get the jobs report tomorrow. If the jobs report comes in weak, this number is going to stay strong. Powell, talking at Jackson Hole, showed concerns about the labor market being weak. If the jobs report comes in strong, or if the previous months that were revised downward end up getting revised back up, or last month's report that came in weaker ends up getting revised back up, the probability here at 97.3% could decline sharply. Now, as I said, initially I'm not expecting rate cuts until the Fed panics, but Powell's under a lot of pressure, and he gave a half-hearted commitment to it. It could be that if the jobs report comes in strong tomorrow, that all hopes are dashed that the Fed is going to cut rates. And then if we see next week, 1 week from now, we get the inflation data with the CPI and it comes in stronger, as I warned several months ago, inflation was going to bottom and begin to rise. That has happened. If it comes in stronger, then again, hopes could be dashed that the Fed is going to cut rates in September. Now, they still may do it. Powell's under a lot of pressure. It may just be a one and done until they panic, and they may shock markets if that may not expect if the jobs report comes in strong, if inflation continues to rise, that would dash hopes of a September cut, but the Fed may surprise the markets and still end up doing it, throw the market a bone. That might spark a massive rally back up to complete the blow off top, give us a September bottom. And Powell could throw Trump a bone as well, get him off his back. Trump wants 300 basis points cut and cuts. We're likely going to get 0.25% here out of Powell and the Fed if they do it. Again, why I was expecting cuts to be jumbo cuts later after the market peaks and begins to crash. We may end up getting one. I don't know if this will happen or play out that way, but I'm just telling you, if we get the jobs report tomorrow and it comes in stronger than expected, it's going to dash hopes of a cut, and this number is going to drop dramatically, lowering the probability of a Fed cut in September and next week with the inflation data. Yes, we got weakness with private payrolls today. Remember, yesterday we got the job openings, and that suggested a sluggish labor market as well. With the private payrolls came in less than expected, 54,000. It's expected to come in at 75,000, 54,000 lower than the 106 previously from the prior month. Then we'll get the jobs report tomorrow before the market opens. It's expected to come in at 75,000. Jobs created previously 73,000. The unemployment rate is expected to tick up to 4.3% from 4.2%. If this number is weak, we could see the market go try to make a new high, slamming into the trend line of resistance again that I've talked about from the 2023 low. This number comes in stronger, or if there are revisions upward from prior months, maybe like the 73,000 gets revised up, or the prior months, we saw revisions on the downside last time. This job report comes in strong. Expect the market to likely sell off. If it comes in weak, then expect resistance to be tested. We could see the S&P try to go take out that previous high. We had a failed breakout, but it hasn't been validated. My signals for the S&P are still bullish. Next Wednesday and Thursday, we're going to get the inflation data. Remember, we got that huge jump with the wholesale inflation. That's going to be on Wednesday, September 10th next week. We got that huge jump. We got the largest increase in 3 years on wholesale inflation with our last report. On Thursday, we'll get on September 11th on Thursday, ahead of the Fed meeting. The following week on the 17th, we'll get the CPI inflation data. Jobs report comes in stronger than anticipated. If we receive revisions up from previous months, inflation continues to rise. Could that be a catalyst for a sell-off ahead of the Fed meeting? Could all hope of a September cut be dashed with the jobs report and the inflation data. We'll see what happens. The VIX gapped higher. It's filling that gap now. The S&P is filling both gaps, Tuesday's gap and last Friday's gap. The Dow was up 350 points, up 0.77%. The S&P was up 0.83%, up 53, back above 6,500. That was the 6,502. That was the gap fill from last Friday. We filled both gaps today on hopes that that jobs report tomorrow is going to be weak. And we got the private payroll showing weakness. Nasdaq up 0.98%. The Russell was up 1.26%. The VIX was down 6.42% to close at 15.30. Now, I do want to say this about the jobs report tomorrow. Again, the market looking for a Goldilocks, not too hot, not too cold, just right. Well, if the jobs report is stronger, the market's going to sell off because it's less likely the Fed will cut. But if it becomes in weak, much weaker than expected, we still could get a sell-off. As I said earlier in the week, we could still end up getting a sell-off because the economy is weakening. What if we end up getting a negative number or something just really, really, really weak? Again, that would suggest we're moving closer to recession. The Fed is way behind. So again, whether the report comes in hot or cold, you could get a sell-off. If it comes in strong, if it comes in really, really bad. I'm just saying that if it does come in weak, we still may try to rally up to the trend line initially, but then end up selling off. Rally up to the resistance trend line yet again, and then sell off, which is directly overhead, the resistance trend line that we've been watching from the 2023 low. Wall Street looking for that Goldilocks number. The rally today is on hopes that it's going to be a weaker number, that we're not going to get a strong jobs report so the Fed can cut, but it's not going to be extreme, or we're not going to move in recession. So again, the jobs report, no matter which way it comes in, you likely are going to get a sell-off unless it comes in line with expectations. So I'm just warning you, again, we may actually try to move to a new high, but it still may fail. You could sell off on the jobs report either way. Just pointing out that if it does come in strong, traders could begin to believe that the Fed is not going to cut rates or reduce the amount of probability that the Fed will cut rates in September. 500 moved above the 78.6 Fibonacci. It filled both gaps. It filled the gap from Tuesday lower. It filled the gap from Friday lower. We at the very, very end of the session, we were stalling at gap resistance, and it filled the gap during the final few minutes of the trading session, and it closed right at that gap fill. So we're just below that level there from last Thursday's high. We had a rising wedge for a while, but then we moved above that level. Here's a potential channel if we try to go higher. This is the hourly chart. And again, if we try to move to a new high, we're going to be slamming right into that. Now, we had this trend line from the 2023 low. We also watch it on the weekly chart. We came up to it. We slammed into it on July 31st, got rejection there, came down to the red trend line. Went back up to the blue one on August 15th, got rejection, went back down to the red trend line. Tried to break, well, we got a lower high actually on last Thursday. Got a lower high, didn't reach the blue trend line. That was around 65.30. Right now it's at about 65.50 if we try to reach it with the jobs report tomorrow. But in order to go lower, you got to take this trend line out. We did take it out on Tuesday. We gapped lower Friday, we gapped lower Tuesday, and then today we went back up and filled both of those gaps. We closed right on the trend line on Tuesday. You got to break below it. There was no confirmation, no follow through. My signals remained bullish. They tried to turn bearish intraday. They couldn't do it. My signals remained bullish. If we rally with the jobs report initially, you're going to rally right up into that trend line again. We may try to rally back up into it, hit it, and then end up reversing. Or maybe we get a gap and trap or something, gap higher, but then reverse and get some kind of reversal bar, or open rally up there, and then end up reversing. This is resistance, and we have not been able to clear that level, but you got to be able to take out the red trend line and get a confirmation and follow through in order to turn lower. We have not been able to do that. S&P has formed a 3 drives to a high. So far, we've had a failed breakout there on Thursday, but the failed breakout has not turned the S&P signals to bearish. You have to have signals validated to turn bearish. We did not get it with that breach of this trend line, and we closed right on it by the end of the session with a bullish hammer. If we do go higher, the trend line directly overhead at 65.50 could be tested again. We're just underneath last Thursday's high. We filled the gap. End up selling off. We need to take out this trend line, and then you need to get a confirmation and a follow through to the breaking of that trend line. So if we rally with the jobs report, the trend line is resistance, or if we rally and sell off, again, we'll be watching. If we sell off, again, watch to see if this red trend line is breaks, which has marked the lows, previous lows, and then we slightly breached it there on Tuesday, but then got right back above it. Thursday, we had that failed breakout. We rallied higher above this peak right here from the August 15th high. We tried to get above it on intraday, didn't close above it, and then we did on the high from last Thursday. 1 week ago, we had a sell-off on Friday. That created a gap. We filled that today, and then we gapped again down on Tuesday. We got the bullish hammer at support, and we rebounded back up. We filled the gap at 64.50, or I'm sorry, 64.60, and then the gap here at 65.02. If we go higher, we'll form a quadruple negative divergence. That is the strongest reversal signal in technical analysis. A triple and quadruple negative divergences are the strongest signals that there are. We keep dropping below the 20-period moving average and getting back above it. The blue line there, drop below it, get back above it, drop below it, got back above it, preventing the 10 from crossing below it, preventing price from holding below it. We're still likely going to see a September sell-off. And Nasdaq tried to form, or I'm sorry, S&P tried to form a rising wedge through the session, but it did not play out with the sell-off. We just continued higher, grinding higher ahead of the jobs report, moving up to extremes here in the 15-minute time frame. We filled the gap here at 64.60, and then we rose up, to pull back, but then continued, and we had the start of a rising wedge there, broke above that trend line, and we hit the August 15th peak. Then we went to gap resistance. I told you to watch these levels here, gap resistance and the August 15th peak in yesterday's video. If we overthrew the gap right here, we talked about that yesterday. Well, we went even beyond that, and we went back to fill the gap back over here at 65.02, and that's where we closed. We closed right at 65.02, just below this peak over here. So again, if we do go higher, then you have a potential channel, or if we get a bigger rally towards the 2023 trend line in that daily and the weekly time frame I've been showing you, it's towards the 65.50 area. Negative divergence developing here, and we have extremes on the RSI. Now, we don't have a rising wedge here, but we do on the Nasdaq 15-minute chart. We're watching. Do we pump higher and go above this level and then end up selling off, or do we see strength and close strong, or do we reverse? You get a strong report or you get a very weak report, the market could sell off either way. Concerns the Fed won't cut, or a weak jobs report, concerned that we're now moving into recession, which we are. That may not be reflected in the jobs data. Start happening, we'll see weakness in the labor market just before the recession or right as the recession is beginning. Still got a possible rising wedge on Nasdaq. Nasdaq came up to just above gap resistance. It hasn't filled the gap yet from the lower high. This is a lower high that's set up here at the Fibonacci retracement level, just under a 78.6 Fibonacci. Well, we don't have a rising wedge on S&P. It went away. We still have a potential rising wedge if we end up selling off. Again, we're at extremes. We still have negative divergence developing on the MACD here in the 15-minute time frame. But if we rally, then this gap comes into play, this high comes into play, but the Nasdaq is still not moving two new highs. It's still not moving above the August 13th peak. The lower high that's set up here was on August 28th. We saw the Nasdaq and the S&P diverge from one another. The Nasdaq 100 had peaked back on August 13th. We saw a 4.30% sell-off. We rebounded back up to just under that 78.6 Fibonacci. If we rally, might try to overthrow that level, so we would challenge this high. If we see a lower high hold and we get another one, have a series of lower highs, you would need a lower low to come back and take out this low and this low from Tuesday in order to continue that trend, to have a lower high, series of lower highs and a lower low, to have a reversal. We saw Nasdaq rally today, but Nvidia kind of lackluster, again, not going back and filling either of the gaps that we had surrounding earnings and the long-legged doji that we had that gave us that reversal. We got confirmation of follow through. We're stalling at the 50 period. The risk is that we're forming a bear flag, that we're forming a little bear flag right here, and then it's going to continue onward down towards our 200 period moving average, or at least moving towards it, going back and testing these highs previously in late 2024 and early 2025. So again, we could be moving towards the $150 area, or down here towards the 200 at even lower levels in the 130 in the 130s here or so. And we still have the 10 below the 20 period moving average here, but momentum turned back up today. We got a bullish reversal of conditions. It turned bearish, turned right back to bullish. And again, here you can see we got the black candlestick at the upper Bollinger Band. We sold off 4.28%. We rallied back up to the 78.6 Fibonacci, turned down, found a bottom, short-term bottom here at support, got a hollow red candlestick, and now we've rallied back up. We're just under this level, and the gap fill is directly overhead. S&P did fill the gap from late August. Nasdaq did not, and still has a lower high, but again, we're going sideways. Now we have Nasdaq having that divergence. We got a lower high. We need to see a lower low if we are going to get further selling. Right now, we're trying to bounce off the 50 period moving average. Nvidia is hovering at the 50. S&P or Nasdaq's above it. We got the divergence on the MACD, but it needs to go negative if we're going to get a bigger sell. Stochastic's trying to turn back up. Does it quickly fail, or do we actually try to cover? Momentum flipping back to bullish today for the Nasdaq, and we're just going sideways. Got a possible head and shoulders here. If we start to break down with a slanted neckline, the left shoulder with the head formation, and a right shoulder if we break down below the 50 period and below that neckline. Bullish reversal of conditions, although the bar is still red. The cloud did flip back to bullish today, going back up, attempting to fill the gap from the lower high that's set up, and that gave the stochastic a bullish cross. The last one we rallied, but then it ended up failing. At the moment, we still have a red bar on the Oscillator in the weekly time frame, but again, you got to see it close below that 10-week moving average, a red line right there. This is what Bitcoin started looking like just before it sold off, which now it has sold off nearly 14%. Nvidia has the same bar going on, the red bar in the weekly time frame. It has a red candle, and it is below the 10-week moving average. So we'll see if the S&P or if Nasdaq joins Nvidia. Nasdaq's getting a bigger rally than Nvidia is, holding below that 10-week moving average. It still has a bearish reversal of conditions. Nasdaq wiped it out today, even though we still have red bars. We got back above the cloud. Nvidia is not doing that. Nvidia got the reversal of conditions. Nasdaq followed suit, but now it's turning right back to bullish. So again, I'll be watching to see, do we hold below the 50 here? Do we hold below the 10-week moving average on Nvidia and end up moving towards the 200-day moving average here? And if so, does Nasdaq follow suit and is prevented from continuing to rally? S&P stochastic trying to turn back up today. We've been getting the red bars on the oscillators, but my signals have remained bullish. Tried to turn back to bearish with the sell-off earlier in the week, and it couldn't do it. I had signals on an intraday basis all turning bearish, but we didn't close that way. We got the bottoming tail, and we prevented a bearish reversal of conditions here, got back above the 10 and 20 period moving average the next day, and here we are rallying back up now to challenge this high ahead of the jobs report. S&P has been going sideways, slightly drifting higher each rally, slamming into resistance in that weekly time frame and the daily trend line from the 2023 low. Bullish reversal of conditions for momentum. Trend signals are mixed. Most of them are still bearish, but again, we still have a lower high on the Nasdaq. Do we get a lower low? Well, S&P signals remain bullish. Signals are still bearish here on Nasdaq. Momentum was bearish. Now it's turning back to bullish. It's still bearish on Nvidia. So I'll be watching. Do signals turn back to bullish on Nasdaq? We go up and slam up into resistance again with the jobs report. The divergence between Nasdaq and S&P end up giving us a September sell-off. Signals still remain bullish on the S&P. Again, intraday, we tried to flip the signals back on Tuesday. We were unable to do that. And again, signals still remain bullish. You have major resistance directly overhead. We've exceeded the 78.6 Fibonacci, so it looks like we might try to move to a new high and flirt with resistance yet again. We're watching to see what the S&P does with the release of the jobs report. S&P signals are still bullish. They did try to flip on Tuesday. They were not successful in doing so. Here in the daily time frame, bars are still red for the Nasdaq with a lower high. Bars are still blue for the S&P 500. S&P has moved to a new high last Thursday. Nasdaq has not. But we saw momentum turn back to bullish today on the Nasdaq. And again, while some signals remain bearish, a few are turning back to bullish, again showing a sideways move back and forth here on the Nasdaq daily chart. So Nasdaq's going sideways with the lower high. S&P is going sideways with the slightly higher high.